So, greetings everyone, and welcome to this one-on-one discussion on a decade policy analysis of Make in India. So, with me today today my name is Ayushmaan, and along with me is Vansh Aggarwal, and we will delve into the policy analysis of the Make in India policy, which was launched in September 2014, and since then it has been a decade of working of this policy. And however, I would put it like this. This wasn't just a policy, it was a campaign. And it was a campaign and it was a more of a response to the structural stagnation that was happening in India. The manufacturing sector had been failing and it needed to be absorbed and expanded the labor force in India. And the import dependence of India was also rising. And thus, the country needed a comprehensive reset in this sector. So, and thus today, we'll explore three critical dimensions to this policy. And firstly, Vansh, I would like to put a question towards you first. Could you tell me, like, what were the structural challenges that the Indian economy faced that led to the launch of Make in India in 2014? And like, how have its objectives evolved over the last decade? And if you could also elaborate upon, like, how has these FDI liberalizations and PLI schemes have shaped this industrial landscape throughout the Make in India policy?
Yeah, certainly, Ayushman. I believe that it's a very important question to address that why Make in India was launched and how its objectives have evolved. When the initiative was launched in 2014, India faced a familiar set of structural problems, a large and growing services-led growth pattern with manufacturing stuck at a low share of GDP, weak participation of global supply chains, slow job creation in labor-intensive sectors, and chronic gaps in ease of doing business. Make in India was therefore framed as both an industrial strategy and a signal to global investors. A raise manufacturing's share, attract capital and technology, and create mass employment. This was not just sloganism, it responded to real structural shortfalls. Now, over the decade, the emphasis has shifted in two important ways. First, from marketing and regulatory easing to much more targeted incentives and industrial missions. Notably, large FDI liberalization across sectors and the rollout of production linked incentives, that is the PLI, from 2020 onwards. Now, these moves reframed policy from open for business to complete for supply chains. And now, secondly, objectives broadened from simply increasing the size of manufacturing to upgrading value chains, moving into electronics, pharma, EV components, and even higher tech segments where India can capture more value, not only low end assembly. The evidence is visible in rising FDI flows and even in PLI driven investment commitments. Now, coming to the question that you posed about how FDI liberalization and PLI schemes have shaped the landscape itself, the FDI liberalization has been a structural game changer. Over the last decade, India has seen substantially higher annual FDI inflows, and policy changes making more sectors accessible have helped anchor multinational investment decisions. Now, this has increased capital and managerial know how entering the manufacturing ecosystem. On the PLI by contrast is the operational lever. It doesn't replace the need for reforms, but it accelerates the on-ground investment in specific sectors. And now, well, again, like electronics, pharmas, autos, even solars, etc., by essentially co-funding the build out of scale plants, and testing quality infrastructure. Across approved PLI schemes, we've seen large investment commitments, rising production numbers, and noticeable export growth, particularly in electronics and mobile. That said, PLI strength is concentrated. A few sectors and a relatively small set of firms capture most incentives. that helps create anchor suppliers, but it does not automatically create a broad, resilient ecosystem of component suppliers or an MSME base that can service advanced manufacturing without additional policy support. So now, giving my perspective and like a short verdict itself on this very first decade, the real gains of this policy has been more foreign capital, large headline investments in electronics and autos, PLI induced capacity, and movement into global value chains in select segments. But structural limits remain. Manufacturing's share of output has moved only modestly. Supply chain depth still lags, and the job impact is concentrated in fewer higher skill roles than the vast semi and unskilled labor forces. In short, the program has built important foundations, but it hasn't yet delivered a broad based industrial transformation. Now, s- uh, after going through these things, I believe that if Ayushman, you could just share some light on has Make in India delivered quality jobs, especially for semi and unskilled workers, and do Skill India and related programs effectively align with industry? You could like go on to also help understand that how have MSMEs benefited or been left behind in this industrial push?
Well, first of all, that was a very wonderful insight by you, Vansh, and like how carefully you have dissected this, the manufacturing sector of India throughout this decade policy of the Make in India program. And also your conclusion towards like how has this been attracting towards the for the skilled and unskilled workers in India, which is a very major issue in India from like the past 2 to 3 decades, if I say so, like in a very nascent term. So, moving on to your question, like this is a very critical question, first of all, and it needs to be projected it needs to be projected the very ground realities of the Make in India program. There are very substantial gaps between the facts and the transformation and implementation of this program. So the numbers report a story of expansion without transformation, I would say. So, yes, I would say the Make in India has generated employment, but we need to examine what kind of jobs we are talking about. See, if we go to the numbers, only about a quarter of manufacturing workers hold regular salaried positions, and the remaining three quarters are in casual, self employed, or unpaid work arrangements. So, what particularly revealing is the contract labor phenomenon, what the scholars refer to it. So today, approximately 42% of factory jobs are contract based, and we have seen organized manufacture grow, certainly. But real wage has been essentially flat around 0.1%. Like, meanwhile, formal job creation through the Employee Provident Fund, the EPFO, which tracks the formal sector employment, has actually declined from 13.9 million subscriptions in the financial year 2019 to 13 million in 2025, like a zero point 0.9 million dropped within the EPFO scheme. So, and also, if we talk about the staffing company sector, which is very essential to this policy scheme, and it has been like praised for its normalization success, it has only touched about 1% of the Indian workforce, roughly around 5.4 million workers. And they are earning modest salaries of around 12,000 to 22,000 per month. And this uncomfortable fact is that the 53% of regular wage and salaried workers still lack social security benefits. And this is the ground reality. And if we over and above talk about Skill India's alignment with industry needs, this is where the gap becomes quite stark. The Pradhan Mantri Kaushal Vikas Yojana, which is also one of the flagship schemes and which interacts with the Make in India policy, has flagship skill training program for youth and has trained around like crores of youth between 2015 to 2014 in its policy year. However, only 24 lakh have secured the jobs. And even those that have got certified by the skill initiative, only 43% of them found work. So, what does this tell us is that there have been a fundamental mismatch between curriculum and the industry demand. Even though the government has acknowledged this gap, this significant gap in the ground reality, and are conducting a district level skill gap study that strengthening industry partnership. but these are all corrective measures for a decade-old initiative. So I would rather say this policy is not a failure. It's a developing policy which needs which needs very ground level initiatives and track of the ground level realities of the people. And moving on to the MSME question you forward, it is a very essential. Just a second. So it is a very MSME sectors has been also one of the stakeholders to this policy, and here is where the Make in India story becomes genuinely bifurcated. See, if we look at the MSME support that they have received, if we take for Maharashtra example, there are 23 MSMEs industrial sector in just one financial year, which have been approved by the state government. And they cover from across various sectors from farm to auto parts to garments. And these received around 162 crore in combined central and state support. And they have been also receiving benefits under the Udyam registration portal, simplifying their enterprise registration, Mudra loans, credit guarantee fund, trust for micro and small enterprises. These are all the benefits that are given to these MSMEs. But the other side here is that the Small Industries Development Bank, which is the principal financial institution for the MSMEs, is have very persistent structural deficits here. So if we talk about, they have very lack of access to formal credit despite these multiple policy schemes, and these MSMEs remain unregistered, and many of the MSMEs remain unregistered in, if we talk about the poor villages, if we see where the policies have not reached yet. So in reality, if we see, the policy support is very unevenly distributed, and larger MSMEs or those better connected to the industrial corridors have thrived. However, traditional craft industries, rural processors, small units, and or these are all left behind by these policies. And the government press release themselves admit in this formal support of this poor connected MSMEs that are available, which needed to be supported. And these are one of the sectors where majority of it are remaining very unaffected by this policy and have remained stagnant throughout this decade. So this what makes it a very heterogeneous development and not a very inclusive growth if you see it for MSMEs. So after all this dwelling upon this of foundationals and the current position of the policy, so we discussed once. So what do you believe? Like, can India sustain its position as a China plus one manufacturing hub across sectors like defense and electronics?
Ayushman, first of all, I really appreciate you bringing in all those statistics in analyzing this policy, this scheme, the analysis of the scheme throughout this decade itself. And yeah, one thing which definitely struck with me is that it's still developing. And now that it's in its developing stage, I believe that the question that you have posed to me right now, it becomes very important because since it's still in its developing stage, we can still turn it into its the towards the right direction. And now, like, coming to the question that you've posed, that can India sustain its position as a China plus manufacturing hub? I believe that India can certainly retain its current footing as China plus one destination, but sustaining it will demand a steeper structural transition that India has always found difficult, and that is shifting from a service dominated economy to a manufacturing powerhouse. Make in India decade has proven that India can attract capital, build scale, and integrate selectively into global value chains, particularly through FDI liberalization and the PLI schemes. Yet, the broader industrial base remains narrow and uneven. Our economy still leans heavily on services for both GDP and employment, while manufacturing struggles to absorb labor at the pace our demography demands. The challenge isn't policy ambition, but structural stickiness, including like fragmented land markets, underdeveloped supply chain ecosystems, high logistics costs, and the skills mismatch that limits large scale industrial depth. Without addressing these foundational constraints, India risks remaining a partial China plus one, strong in final assembly and niche sectors, but not in the full spectrum manufacturing that sustains long term competitiveness. And now, Ayushman, that brings us to a larger philosophical question. If India aspires to global leadership, why settle for being China plus one at all? The very framing, suggests a derivative ambition, as if our success depends on China's overflow rather than our own innovation and industrial strength. The goal should be to invert that equation, to make the world see like China as India plus one. That requires more than incentives. It demands relentless institutional reform, ecosystem depth, and an identity built on quality, trust, and technological credibility. Make in India has laid an important foundation, but the coming next decade must transform it from an investor pitch into an industrial culture, one that competes not by substitution but by superiority. And now this brings me to my own question, which I want to pose to you, Ayushman. That what role do trade agreements, tariff policies, and logistics reforms play in determining whether Make in India becomes globally competitive?
I agree with your point towards the international perspective of this, India being a manufacturer hub across the globe, and like thinking about the ground realities of this policy, and like not delving into the race to be the first one to establish and beat China, rather than focusing in making a sustainable manufacturer hub. And I agree with your very much point here. And I would also further expand on this, and which will be one of my pointers to your question. So I'll be direct that trade and logistics are where Make in India's global ambition will either materialize or will stall. So, if you see, India has recognized the geopolitical movement and is moving aggressively on trade agreements. For example, if you take the India-UK Free Trade Agreement, the FTA, which is a pact to reduce tariffs, barriers between countries, and it was very recently concluded between May 2025 and is very ambitious even for the Make in India policy. So, we are at this advanced stages with the US, EU, and the Australia. And similarly, if you see the Mission 500 pact along with it with the US, where we have agreed to slash tariffs of over 23 billion worth of imports, gems, pharmaceuticals, auto parts, and very much bilateral trades by 2030, setting aside the various international relations that are currently ongoing. So, as we have already talked about, Vansh, this China plus one logic in action, where global firms are diversifying away from Chinese manufacturing bases, like companies such as Apple and various other electronic giants. So this has already moved. Like if we see the recent Apple statistics, 14% of iPhone assembly have been shifted to India, and like multinational companies are diversing their supply chains on a way, and other countries are trying to restrict it so that India doesn't become one of the manufacturing hub that it is capable of. So but these there are certain constraints that we cannot ignore with it, which is you have also pointed out the certain manufactureristics that India lacks. So India maintains this highest average tariff rates among the G20 countries within its protectionist attitude towards its certain sectors such as agriculture, and with some of the duties exceeding 100% tariffs. So these tariffs protect very nascent industries of India, and yet these have very inflate input costs and invite retaliation from the other countries. And due to this, we have been caught in a policy contradiction, and for which it requires very much bilateral agreements, and we require support from other countries as well to understand and protect our various sectors of the India. And even our foreign minister Jaishankar was also very candid about this limitation which India has by protecting the sector as well as gaining, support from other countries from its tariff and trades, and which the US have also even blamed it for. So, if we see this, the India's trade strategy is like pragmatic, but it's still evolving. And we are leveraging the geopolitical shifts and aggressively pursuing the FTAs, which is very essential for this. But the only hurdle which we face, the primary and the biggest hurdle which we face is the tariff structure, which is a very competitive handicap thing. And if we revamp this, it will be very much benefit for the India. However, it needs to ensure that its nascent sectors are not harmed. So, in if I summarize briefly, Make in India's decade has been another institutional ambition meeting, and it has very much implementation complexities. There are jobs, but black quality. We have supported MSMEs, but like we are pursuing global competitiveness. Like we are managing the tensions, but not resolving it. So, but that are all parts of the policy making, and it has only been a decade of this major, structural reform that we need. And I believe this will turn out to be a very powerful tool for India in the very global competitiveness and in international relations.
Yeah, Ayushman, I completely agree with what you have said. And now, like, just building on that, I'd say that trade policy and logistics are what turn Make in India from a vision into a global advantage, as has rightly been pointed by you. If the past decade proved India is open for business, I believe that the next must show we are ready to lead it. True success will come when companies invest here not as China plus one option, but because India itself stands as the first choice for scale, innovation, and trust. And I believe, and I would end on that to me is the real promise of Make in India. Thank you,
Thank you,
Ayushman,
Vansh.
for joining for this one-on-one session today.
Thank you, Vansh, for your wonderful remarks.